Let's take a quick peek at IBM. And this is what it looks like here today. IBM, wow. So this continues to get worse here. IBM down 23.27%. It's actually up off of its dead low at 217. So this is what the chart looks like here. You can see we were holding up here right around 290. Big pullback takes us all the way down. Let's see, 217. We're right down here. This blows through all of the moving averages, a ton of volume shelves that we've had here that we've really been watching. And it really kind of puts this support area on deck. Now, looking at this, let's get the exact bottom of this candle here. Low is 212.34. So you want to call this maybe 212 to 220. That makes sense as the possible support area here. I know that's a bit wide. We like him a little bit tighter than that. But nonetheless, this is kind of what we're watching here on IBM. I'd be curious to know if any of you think that this IBM pull is overdone and that there might be a short-term trade on a regression back to the mean once we open here. But in any case, this is what's going on. Now, I did actually break some of this down because I was looking at this right when it happened. Pretty crazy. I'll go through some of my notes. Again, I don't have a story for this, so I apologize. I'm just going off of some of the notes here. They reported preliminary Q2 2026 earnings, and the headline results were mixed. So revenue was up 1% year over year, 17.2 billion. GAAP EPS was down 2%. Non-GAAP EPS was plus 5%. Free cash flows was right there at like 4.8 billion. So the top line was sluggish, but the earnings were supported by adjustments and I guess productivity there. As far as the segments in IBM, which I know was a big thing, software, that was the only bright spot in the report. That was plus 5%. So that's good. Consulting was flat, plus 1% on constant currency. Really not a whole lot going on there. But the main drag on this was the infrastructure, and that's minus 7%. So IBM still leans heavily on software growth, but that infrastructure volatility is clearly hurting it, at least in this. Did some gross margin stuff. The GAAP gross margin is 57.7%. That's actually down 100 bips. Core profitability is slightly worse, but cost controls and adjustments are kind of masking it for that non-GAAP number that we saw. And then as far as what went wrong here, IBM is calling out execution and demand shift issues in this. So the mainframe, the Z systems underperformed expectations. Customers redirected CapEx. And I think this was probably the big takeaway here, that we seem to be watching CapEx numbers and projections through all of these companies. Customers redirected CapEx towards servers, storage, and memory. These are due to supply constraints and the expected price increases that we've seen across the entire industry. They also mentioned that they failed to close large deals on time. Now, you would hope that they'd be able to correct this problem and that wouldn't make an appearance in a further report, but nonetheless, less than ideal there that they're not able to close some of those deals. It's less about demand destruction. It's more about timing and their execution miss. So I don't think that there's necessarily a read-through to some of the other AI names that we're looking through, at least not yet. As far as some bright spots, there were actually a couple. Red Hat, that was plus 11%. That's accelerating growth, so that's good there. There's strong demand for power and storage from this, so that's good. AI and hybrid cloud are still working, so that's good. Now, the other thing is here, there was a quantum push. So there's a $10 billion total in the quantum investment over 5 years. That's actually something that we've been looking at very clearly. IBM wants to be a leader in quantum. So I know we talk a lot about like Rigetti and Ionic and even QNT now. It's going to be important that we don't forget here about IBM. Just kind of summarizing this, it sure seems like this was an execution miss, but the AI and the software story are actually still intact. So that's kind of why I'm asking why, if there's anyone that's kind of planning for a shorter term trade here, or maybe any buy, maybe you are looking to add this as part of an investment. But like I said, just came out here this morning, so I didn't have a whole lot of time to prepare for it, but did go through the press release. That's what I'm looking for here. Joe saying, Ryan, in your view, how specific to IBM are these supply chain infrastructure problems they cite? I would say mostly to them. I very clearly, or at least what they're saying, is that the customers are kind of reacting and then choosing to alter their CapEx in all of that. But to me, with all of the talk and even like the self-admitted talk about an execution miss, to me, without any other data point, Joe, it really seems like this is going to be specific to IBM. And furthermore, it doesn't actually seem like it's going to collapse everything, right? It seems like it's all within their control to kind of turn around.